I don't feel like we're really seeing from consumer economy. I don't feel like we've seen the rebound that they're saying. Spending, I don't see is up still. We're still seeing personal consumption being kind of in a troublesome area. And, I really think that we need to look at where are we seeing these jobs? I'm not exactly sure where we've seen the creation of that. I'm not sure your viewpoint on that, Kerry.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, we got some GDP numbers out for September. And Mindy McIntosh is with us now to help review and make sense of these numbers. It sounds like things are really going great. I hope they're going as good for you, Mindy, as the GDP number would indicate.
Well, it's sure making it look like these numbers are healthy when we take a look at 3%. But the Bureau had released that's our final update that we've had currently. And the rising annually 3% pace kind of shaking up from a shaky 1.4% growth in quarter one. Mm-hmm. I don't feel like we're really seeing from consumer economy. I don't feel like we've seen the rebound that they're saying. Spending, I don't see is up still. We're still seeing personal consumption being kind of in a troublesome area. And, I really think that we need to look at where are we seeing these jobs? I'm not exactly sure where we've seen the creation of that. I'm not sure your viewpoint on that, Kerry.
Yeah, that's a good question. This would be this type of growth number. They redefined what a recession was, right? Because we used to define it as 2 consecutive quarters of negative GDP growth. And then we got a number that they miscounted the jobs. There were actually 818,000 phantom jobs. Yeah. And now, this. Do they have any credibility left here? The market's going up. It seems like happy days are here again. I'd like to start playing that song again, but it's just all seems to be smoke and mirrors.
Well, that's why I always say, it's a big question right now where our consumers, a lot of the folks that we're dealing with, they're wondering, is inflation and such really declining? Are things becoming more an even keel? What's happening in the job market? And I really say, maybe not. And you just kind of brought it up a little bit. When we remove energy prices, inflation is still above 3%. If we take out food, energy, and even housing, it's about 4.5%. So how are we giving the dollar direction and or redirection? You're right. Stocks are doing what they should be doing. Bonds are still programs. We're using a lot of bond alternatives for our client folks to make sure that we're still hedging some changes. But, unemployment rates, we should see them decrease with that Fed cut. But because I think that the Feds did make that 0.5 basis point cut as well, just because we want to make sure we don't get more recession territory. But our perspective really is, a lot about taking a look at overall picture of what we're asking our clients with interest rates and unemployment. And so historically, economic trends from past presidential cycles, even in elections, it's, obviously impossible to predict our exact economic implications, but I am so concerned with with the people and the consumers that we're seeing in our office day in and day out, what's going to happen with post-election cycles, and really what our theory is behind that. So we really have to hone in on the fundamentals and make sure we're not doing too much of a political basis this year, but we want to make sure that we're being relevant in the portfolios and the things that we're seeing folks do on a day-to-day basis.
Right. Yeah. So, and then you look and you see the dollar is declining. You see gold prices hitting at or near all-time highs, going to 2,700 imminently. So it would appear. Silver is at $32 the ounce. And, you got to wonder, are we missing something? Even copper, which had been kind of moribund, but it still was trading in the $4 range. Copper is at $4.50 now. heading back up to 5. So where does all this leave us here? With a feeling like we're not really seeing the whole picture from these government numbers, right? Even oil prices starting to head up now again. And is this just the election field distortion of reality that's taking place, or is there something deeper going on here, Mindy?
Well, I think sometimes we have to look out for avoiding emotional and or political motivated investment decisions right now. But what we're even seeing from our clients is there's been market volatility, and we're seeing folks more fleeing to what they call the tangibles, or they want more outside diversification. So we're seeing that happen. So I think that's why we're seeing the gold and the silver. I think that we're seeing it in higher usage. So there's more demand on that currently as people are more nervous and uneasy about the market. We're also seeing on the flip side, more folks are heavier in cash right now too. And I think that, they're just unsure of what's going to happen with political, views, what they've even seen. Who all watched the debate. So that's over the long term. It's really our job here in our firm is we're trying to help folks prepare and establish for a nice retirement. And so we want to make sure they're not too heavy in cash. We do want to have some of those outside tangibles and diversification, but really guiding our focus as much as possible through the political noise, which some of it I think you're alluding to here, Kerry, is just, we have to be okay with, Democratic versus Republicans, even ideally, when we take a look over the past 50 years, the digital age is much more increasing right now. We have AI to think about. We have a lot of things driving differences right now that we take a look at. So shifting in incentives for outlet, social media platforms, audiences are getting even more biased on what they're feeling. I think about trends in the market and popularization of different ideas. So with our process, we just aim to make sure that our client folks and their experience can lead to clarity, just to get sometimes of just the buzz of the headlines out of what they're actually reading, and let's get down to the basics of what's really happening.
Hey, you're in Michigan, so I'm sure you remember this slogan. I mean, it was U.S. economic policy probably for 50, 60 years, and that is what's good for GM is good for the U.S. Is it time to change that and say what's good for Tesla is good for the U.S.?
Oh, I feel like you do see that everywhere, right? Even in any of the morning feeds that I read, we see it everywhere. And what are they trying to get involved with now? And how is he continuing to make a staple? So, yeah, I mean, before it was GM, I live in Michigan. I'm not far from like some of the big plants in Flint, Michigan here, which is only about an hour away. And we also need to make sure that even folks that are looking to have Tesla in their portfolio, are we too heavily weighted there? And then what are the tax implications, especially if you're in qualified accounts? It's a whole nother discussion. But when we take a look at the world right now, what we're paying for taxes, we have huge legislative risk right now on what our taxes actually are going to be in the future that can go nowhere but up. So I think that, rather than getting tripped up on too many individual pieces, we need to make sure that we're urging our folks to answer questions like long-term goals even, right? So instead of looking today, Tesla, AI, how can they get involved in the new great thing? More it's what are financial goals? When do they need to reach them? How much risk can folks really tolerate? And do they need the growth that they're speculating or thinking they want? Or are they already kind of won the game at work and now we need to do a great income and withdrawal strategy for them? So these are all things we're safe.
I get it. Yeah, maybe what's good for Tesla is good for the world, but not necessarily the stock market and your retirement, right?
Right. Absolutely.
Okay. All right. So emerging trends here. You think we're going to see a shift in as far as the leading sectors in the market? Are we kind of going through a transformation here? What is your take on it?
I really think we're still going to see with what's happening with AI, tech, Meta, all those platforms, I think are going to continue to be successful and do well. I do think one area we should look out for, though, is more nuclear power in the future, especially with what we're seeing overseas. Clean energy, I really think is a big viewpoint in a lot of sectors. So I think we can look out for that. I always want to continue to maintain looking at some of our staples like healthcare as well. So those would be some of my key fundamentals. Where are our stabilizers? What are some things that should be steady Eddie? And then what is still the newer hot button? Like, sure, we had the Apples and Amazons and Microsoft of the world, but it's really that tech AI that I continue to feel like we're going to see that in the forefront of some big things still for the next year plus.
Okay. All right. I'll buy that. And finally, when we have this conversation in a year, is the economy going to be booming, the same, or lower?
Oh, I think that has a lot to do with November and election. I'm a very optimistic person. I want to say that it's going to be booming, but I have my own reservations. But I have deeper reservations than just a year from now. My reservations lie a lot more in, I feel like, legislative and tax risks in the future. Like for what my oldest daughter is 15 years old. I really, really am concerned about the future for our youth. But a year from now, I think that there's a lot more to see of what happens in election time. But also, even some of these numbers that just come out, Kerry, I'm not feeling it.
Yeah. Well, so I was going to make a joke. You're talking about kids, but you have young kids. I'll refrain from the joke. My kids are grown. It's their problem. I don't care anymore. That's kind of where I'm at with it. It's like, hey, I'm just going to enjoy my life, and hopefully my money will outlast me. But you never know about these things, right? And that's, I'm sure,
biggest question. Yeah, and I agree with you, Kerry. You never know. It's the biggest question that our actual clients ask us. Do I have enough money? Am I going to be okay with healthcare costs and things happening in the world? Am I going to have enough income to sustain my 25 or 30 years of retirement? Because with advancements in health, so we have to have more diversification. But some are like you, Kerry. They're like, hey, I bet you would say the day you pass away, if all of your accounts are at a zero, you won. That is
well. Well, I mean, the one thing I learned kind of 20 years ago is never retire, semi-retire, right? As long as you can do things, bring in enough cash flow that'll keep you happy as long as you can. And then when you can't, the money isn't going to matter anymore anyway. So
that's right.
That's kind of my...
Stay active too. If we stay active, involved, and keep our brain power going and keep our bodies moving, I say that less things happen to us. We do continue to maintain better by staying active. So I fully agree with you, Kerry. Keep on doing something that you enjoy. Mentally active, physically active, because you'll just have better quality of life, and financially active. Appreciate you coming on. As always, Mindy, just tell us where we find you. How do we connect with you on the web? Sure. Thanks, Kerry. I appreciate it. You can find us at wealthmichigan.com. Or by all means, anytime you reach out there, we do actually have some reports, informational, educational sessions set up, but that's wealthmichigan.com. Probably the best way to locate our McIntosh and Associates firm and find out about more information and how we can help. Excellent. And looking out your window there, it looks like winter is coming, although I heard it's pretty warm up in Michigan right now. But it's been great. We've having some fall mornings now for sure, and it's getting dark earlier, but we've still had some great weather, and it's been good for our outdoor sports seasons, that's for sure. Hey, well, we only have 2 seasons here in Florida. I'd like to say hot and hotter. So right now we're getting done with hotter and we're going into hot, which is fine with me. So we'll talk to you again soon. Hey, if you've got a question for Mindy or myself, kl@kerrylutz.com. That's the email address. And you'll find a link to Mindy's site in the show notes to this interview on financialsurvivalnetwork.com. While you're there, please sign up for your free newsletter. Mindy, always a pleasure. Thanks so much for stopping by. Thanks, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.